your readers are very bullish right now.
They are, and like a lot of investors, both big institutional investors and smaller retail investors, they're very bullish. The animal spirits are running wild because it's that vaccine opening up, in their minds, the economy and opening up the markets for bigger profits down the road. 77% are expecting gains in 2021. Gains are not that uncommon, but 77%, we have 20% of those folks expecting gains of 10% or more. So this cohort really bullish on what they see going into the future. And they like that home cooking. They like U.S. stocks. They've been making money in U.S. stocks all year since April, and they think that that's going to continue. But that bullishness, you see it in the individual investor, American individual investor surveys. You see it in the big institutional money manager surveys. Everybody a little bullish here. Sometimes a contrarian indicator. Could be this time too, but they are all in for stocks right now, Brian.
Well, and like you said, home cooking, you got the fireplace going, maybe throwing a little brick oven pizza there behind you, Caleb. I mean, it's the gambler's fallacy though, right? I mean, it's like what's been working is going to continue to work. There's no way the Steelers will lose to the Redskins. What happened? You know, when everybody likes the same thing, domestic, technology, biotech, again, they may be right, Caleb. You got smart readers. We got smart viewers. They may be correct, but sort of just be careful. Everybody seems to be in that same basket.
Right. It's a very crowded trade. It's been a very crowded trade all year. That said, that's kind of where the money's been made. And except for the past few weeks, Brian, as we saw the sector rotation into value and then the mini rotation from value to defensive just over the last few days as the virus has resurged. But these folks are tried and true. We surveyed them. Most of them are out in the West, out in the southern part of the U.S. Most of them a little bit older, 55 or older, experienced investors, but still think technology and pharma and healthcare are going to lead the gains in 2021. They've kind of been with that party all year. They want to stick with that party in 2021 and going forward. So they like what they've seen so far, and they look at the administration. We surveyed them back before the election. They didn't care really who won. They thought the next 4 years would look a lot like the last 4 years, minus the COVID. So they continue to feel like the big gains are going to happen where they've been happening. Big tech, some Tesla, some pharma, some healthcare, and that's kind of where they're comfortable.
And a little Washington football team, excuse me there, throwing in, just showed my age. Caleb Silver, what are the biggest risks? Is the biggest risk policy, or is the biggest risk still the virus?
Yeah, the biggest risk is the virus. And going into the election, it was the election and the potential unrest after the election. As soon as we got a few days past that, it was all about the virus. But they got bullish right away. They've been bullish all year since April, since we started surveying them. So they've been bullish all year, but they got very bullish after the election because they felt like the sky was clearing a little bit in terms of policy. They knew what the next 4 years would look like. And then lately it's been the virus. And it's on everybody's mind, obviously. That's why this vaccine news is so important. But it's been on their mind. It's the number one concern. And after that, they do think higher taxes are coming. They may not be coming in the first year or two, but they expect higher taxes on individuals, higher earning individuals, and on corporations, which of course could take a bite out of profits. They know they're coming, maybe not right away, but eventually.
Shepard Smith here. Thanks for watching CNBC on YouTube.